Hello there. Wow, it's been a while. Happy you have joined me for this awesome video lesson. And yeah, welcome to this video lesson. Before I go on, allow me to thank TradingView for allowing me to use their platform to record these videos for you. Also, I'd love to thank my mentors, Robert Kiyosaki, Timothy Sykes, and Matthew Creator. And Robert Kiyosaki's book, Rich Dad Poor Dad. Timothy Sykes, he wrote the foreword to the book, The Penny Stock Course. And then finally, Matthew Crater, who wrote um, Rocket Stocks. And you can find all their books on Amazon Kindle. Now, this this video is going to be is very jam packed. It's very technical heavy. So if you look here, we have about okay, let's turn off this camera here. We have about one, two, three, four, five stocks to watch this coming week. So the first one we have is Meta. Now I'm using the rate of change, 9-day rate of change, and I'm also using the commodity channel index. So when you look at this chart, please tell me, what do you think this is? Do you think this is an uptrend or a downtrend? Okay, let's look at another chart. When you look at a chart like this one is a gap up, right? And so what type of a gap do you think this one is? Is it a continuation gap, a breakaway gap, or an island gap? And then when you look at this one, tell me, what do you think? Is this an uptrend or a downtrend? And then we have this one here as well. When you look at this chart, do you think it's an uptrend or a downtrend? And then finally, we're gonna look at this one here. So tell me, just by looking at this, do you think this is a good buy or a good sell? If you notice to the right here, we have indicators that are telling us what this means. So pay attention to the indicators right here at the bottom. We have been blessed so much by TradingView to tell us the kind of indications they are giving. Okay, so this one, analysts say it's a buy, but then technically it says it's a sell. We look again, here it says buy, and here it says buy. And then we look at this one as well. It says buy and buy. So these are just to give you ideas of what is. Notice that with Meta, we're left with 4 more days until they announce earnings. Take note of that, because usually when earning reports happen, that is also a good indicator. We have here 3 months until the next earnings report. As with Starbucks, we have 2 more days until the earnings report. With Visa, we have 3 months until the earnings report. And then finally, with AMD, we have 2 more days. So the favorites are the ones closest to the earnings report, which is AMD and Meta. So ideally, these two are favorites because the earnings report act more of like a catalyst. And then if you look at a Meta here, the rate of change is very high. Rate of change represents momentum, even though we are in an overbought zone. So when the price is above here, we are overbought. Okay, so overbought means market rally. Okay, so we're in a market rally. This means we have fresh new buyers in the market. So you can look here, we had the market rally here, then it crashed. We had another market rally here, and then it crashed. We had another market rally here, and then it crashed. Here we are still in a market rally waiting for the next crash. Now the question is, can you buy before the market rally? And the answer is absolutely yes. So in this case, the best time to have bought would have been here before the market rally. So we have this spot here, and then we have this spot here as well. So are these good buys? It is really up to you, but the best time to buy are when stocks are not in a market rally. Okay, but the question now comes is, when do we know whether a stock is not in a market rally? So if we look at Visa, the market rally is over. It has crashed below the market rally here, and earnings report is 3 months from now. So could Visa be a good buy? I don't know. That's really up to you to decide. If we look at Starbucks as well, it is not in a market rally downtrend. So you can see, like from here, it is in this zone here, and it is not in a market rally on the downside. So if you look at this is a market rally on the downside. Then people buy to cover. When it goes back up on top, it is called buy to cover. All right, and then it came back down here in a downturn rally, came back up here where it was a little bit more quiet, and then hopefully there'll be another rally, because this one is downtrending. So again, this is just my observation, but from my observation and from my experience, I think it is safer to buy when it is not in a rally. Okay, now can you buy on the breakout like here? That's like buying from the breakout, maybe. But ideally, you want to buy when the market is kind of flat, kind of like what's happened here, right? From this zone here to this zone here, it was kind of like flat. It was in this channel right here. So it wasn't really in a market rally, and you could have bought. So that's the video lesson. I hope you have really enjoyed it. I know this one was is jam packed with heavy advanced technical analysis, and you could see the rate of change as well. So rate of change is kind of like the speed of the price. So I'd love to thank you so much for watching. Please feel free to rewatch this video again. This is advanced technical analysis, and I hope you have a safe trading week. Remember, do not uh, use margin. Trade safely. My disclaimer is, do not buy what I tell you to buy, do not sell what I tell you to sell. Do your own research before you buy or sell anything. I would love to thank you so much for watching. Take care, and bye bye.